Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 27th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement in your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Well, it being a Monday, usually light, even lighter than normal because we have a European bank holiday that will affect volume as well. So not a whole lot to talk about on the economic front. Let's talk about the markets here. We've got crude oil just slightly in negative territory, but trying to push higher up against that 50 Fibonacci that is on the 3-year Fibonacci scale, if you will, from the high and low of 3 years. That being said, we're right there pretty close to the 70s, but I've talked about this. I think this 60 to 70 area is going to bounce back and forth for a little while now, especially with the economic data not being as great as we were once expecting. So beating some of those good numbers was championing a good economy, but now it's a little bit flaky. So I think that crude oil is going to have a difficult time rallying in this type of economic environment. All right, but crude oil unchanged for the most part right there at 68.70. Gold is moving higher. Just about everybody's got to be happy today with the markets because they're just about all higher. Gold moving higher by about $2 right now, testing this 38 Fibonacci. That is going to be a major resistance area for the bulls to get through. Bitcoin is moving higher as well, up $100. But again, not a whole lot of volume going on in here, and just doesn't seem like there's a whole lot of interest in buying a lot of Bitcoin at these levels. Bonds are coming off. This morning they were in positive territory, but down by about a half a point right now. That's why I was talking about everybody's happy, because even the bonds were up on the day a little bit earlier, but down a half a point. Now, as we would expect with the E-mini S&Ps, Dow, and NASDAQ higher on the day. Surprisingly enough, though, we've got the VIX moving higher. With all of these markets jacking higher, there's still some volatility coming into these markets as people are getting a little bit worried about the equities at all-time highs. That would be where they want to start buying them. All right, the Dow Jones Industrial Average up almost 300 points, 250 points, I guess, near the highs of the day. Friday, we got above the Fibonacci 38 extension level, and today we popped above the value area high. This could get shorts like really running right now because we are above this value area high. They're going to start getting a little bit nervous at this point. NASDAQ Friday got above the 61 Fibonacci. We've been talking about these levels for so long, and they've acted as resistance. But now that we're through that, again, shorts are going to be a little bit nervous. Longs have no economic data to really stomp them out. Low volume because Europe's closed. That causes a lot of times a melt up, and that's what I think we're seeing here today in the NASDAQ, Dow Jones, and E-mini S&Ps. With the E-mini S&Ps up almost 30 points. Again, they got above the 61 Fibonacci today. Was acting as resistance on Friday. We've talked about that several times. Once we get above that, we could really see the upside happen quickly because of those shorts relying on that Fibonacci area as a resistance. And once we peel through that, that's where they start pulling out all the stops and trying to get out of those trades. Again, overnight inventory getting long. No real attempt to flush those guys out. No economic data or anything else to go on. Just a slow melt up. That is a catalyst for more bullishness when you don't try and flush out those overnight inventories. And as you can see, the E-mini S&P is near the highs of the day. All right, a couple of trades that I've covered and or added. Let's talk about Tesla. I still have on my 2-year puts, and they're not quite 2 years now, but 2 years in duration. But I've been selling calls and stuff like that around this with a high implied volatility. That move allowed me to start selling some premium in here. So I started off selling the September 390 calls, and I sold them originally for $1.47. The market moved against me. Volatility really stayed pretty high, didn't come off that much. So I decided to add some more SEP 390 calls at 226. So it put my average right around $1.60 because that add-on, I didn't add on as much as the original tranche. So that brought my break even up to $1.60. This morning when the market was slamming, I tried to put in a bid for 60 cents to get out of those, and something went wrong and it went to the market, and I bought those back at 97 cents. So it was still a profitable trade. At the time, I bought the high of the day. I think the last trade right before that was 20 cents lower than where I bought them. But that's where I was trying to get in, right around 60 cents, the low of the day. And something, lo and behold, went wrong. And when I hit confirm and send, one of the worst feelings ever came about on me. And that was hearing the cha-ching on the first click of the button. I hate that. I like to do the cancel, replace, and do the market discovery. That is one of the worst feelings ever, is when you hit click and you are filled. And that's on an opening trade for me anyway. I hate that. But anyway, I'm out of that Tesla short call position for a profit. So I can't complain too much. Maybe it was Freudian that it got me out of there, and that the market turned around afterwards. Who knows? All right, so then on to what I've added, XRT. It looks like it's kind of gotten toppy. You know, I may have waited a little too long after 2 days of confirmation in a sense. But with XRT, I went into the October and sold the 51 puts in there for $1.12. All right, so we got that bit of off that. Low implied volatility. I'm buying premium, so I went in there and bought the October 51 puts. I'm like, wait a second, I wouldn't have sold those if I'm bearish. So I basically bought those 51 puts for $1.12. All right, so looking for the market to correct here. Did that both in my IRA and in my margin account. So XRT to the downside. It's the retail sector ETF. I think the retail sector has done very well recently, especially with earnings behind us. I think we might start seeing a little bit of rollover there and more movement into the tech sector. So that's kind of what I'm expecting there. And then finally, with EWZ, I actually don't really have a directional bias here, but I can't bypass the fact that there is basically 90% implied volatility in here. So I decided to play EWZ to the downside by selling some calls in the September, and I sold those 36 calls in there for 40 cents. Only did that in my margin account. But with today's pop, high implied volatility, I still expect this to roll over a little bit. And having said that, being able to get those 36 calls, that's above the value area low, which is going to act as resistance. So that is why I picked that strike as well. All right, a little bit more aggressive than I normally talk about, but because of that value area high going to act as resistance, there's several of the resistance areas it's got to go through. For instance, the 50-day moving average, all of that is going to act as resistance on the way up. So those are the two trades I added and got out of my Tesla. Still holding on to one of them that you guys may be curious about, and that is in my Google trade. Google, I'm letting squeeze out a little bit longer. It's well over 50% of my max profit, but I'm just letting it ride out for a little bit longer. I did it as a smaller tranche, so I'm still riding that one out. If you remember, I'm short the 111 puts, and as Google has gone, it has done nothing but really showed strength. So that's another reason why I'm kind of holding on to it, but keeping a daily watch on it. Today's move higher today, really helping out. But like I said, those 111 puts are like way down here, so I'm not too concerned right now. All right, that's about it for today. Friday's webinar is going to be on the straddle with no downside risk. So a lot of people are buying puts and things of that nature. They are concerned about downside with the levels that we're at. Therefore, this is going to be a great strategy to implement for anybody who is at all concerned about the downside risk. Got a market neutral assumption, but worried about that downside. I'll show you how to set that up in Thursday's webinar. So check that out at protraderstrategies.com. And if you can't take that, take it easy.